I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA Review. Today is January 10, Friday, 2025. Hope you had a good week and a good day here. So we had a beautiful push down as we kind of expected. Last video I made, no, this was made on the 7th. I was talking about that we wouldn't probably push that high. We would come up and then fall down. And that's exactly what we did, but we didn't even get this high. We failed. So let's get into it here. You'll see the beautiful, I don't know where to begin. As you can see, look at these, look at the daily, look at these candles. They're using this memorial and the slithering down with these candles right here. See that small candles right there, which is the 8th, Wednesday and Thursday. And then we get a raid up first. So if you look at here on the hour, you can see we raided up first. We took all that liquidity right there. We left that kind of like a swing high right here. Left that rejection wick right there, and then boom, sold off. Now, what are we gunning for? We're obviously aiming for the previous week's low. And then if you look to your, also for your notes, like the algorithm will reference the 20 to 60 days of liquidity. So in this case, we're looking for like 60 days of liquidity. What's in that liquidity? What's in those previous 60 days? If you take a look here, we have, if you look at the weekly chart, you'll see, let me zoom in. You'll see that we have that low right there. That was a target for me. This low of this here, which you'll see was that low right there. See that right there? So we end up getting that, and then we left this. So they dangled this. They didn't come to this gap, and it's the end of the week. It's Friday, so you expect that big buy up, which is going to create the wick of the week of the bottom side, right? So take a look here. When we, and I'm going to show the trades just for today, but today, like on a Thursday, Friday, you want to, generally speaking, want to be ready at 8:30. Now, I'm not trying to catch this or anything like that, right? So let the first play happen, right? Wicks down, comes up, right? You see this? Now we're sitting at the gap, and then we get another drive down. So that's 2 drives down. And you don't necessarily need 3. 2 is good enough, especially when it's moving fast. Sure enough, the price shoots down here. We're inside that 2 to 2.5. Remember I was talking about that? The 2 to 2.5. I'd like to see it come in there. We did. And I wasn't bullish here. I was still bearish. But the way this was oversold, the way this wicked and started coming up, perfect buy. Now, what am I doing with this? This is not an intention to hold forever. This is me just trying to catch the trade up into where? Into here. Why? Because, well, this is a big ass imbalance, number one. Number two, the liquidity there, and I can't go into much detail, but if you are on a second chart, you'll see a lot more clarity. So I did use a 15-second chart for a lot of this. But anyways, we beautiful fucking entry, and as you can see, I got the projection from here to here. So I'm only projecting this at first because I also can use this swing right here. But at this point, I'm just measuring this, and I do have a 3 to 3 to 4. So I understand a nice reversal area here for now. Sure enough, price respects this last down candle and this inversion right here. Not pretty, but it is what it is. So looked at it like pretty much pushing up and then getting into, and we were kind of stuck at this 1 and 1.5. So for me, it's already a big trade, and I know there's going to be plenty of moves for the rest of the day. So you want to take this out well before 9:30. So sure enough, that's what I did. Beautiful trade, and let's go to the next one. So here, 9:30 starts, right? I ended up getting out I ended up getting out right here. So I'm trailing the stop. So especially when you have it, giving you that bullish order flow, right? Get stopped out. Perfect. Now 9:30 happens, right? So 9:30, when you have, now for your notes, when you have a big opening gap like this gap was I don't know, like 150 points or whatever it was. Yeah, probably even more. But anyway, when you have it over that, when you have over 120 points type of gap, you expect it to be dropping. You don't expect it to be reaching up into the 50% or even the top 25%. So you can so the first move happens, right? Pushes down, breaks structure. I have to go to the chart to show you, but just so you can see this flow. I want to make this quick. Jesus, why am I so slow? Okay, so I'm looking at this structure like this. So that's a high and then a retrace back. And then I have this high and then I have a retrace back right here. Then we have the push up right before 9:30 and it does take out that high. And then what does it do? Boom, breaks. Retraces back. Perfect. To that last up candle. And then off to the races, right? So if you saw that, you see that? So that is my understanding. And when it retraces all the way back up, guess what? I have a beautiful inversion imbalance right there, plus the actual imbalance itself and that last candle you see me highlighting with a blue line. So we tap it. Perfect. And then this next candle pushes up, raids that, and then starts to come down. As soon as it's coming down, I'm entered. Okay? And no drawdown, literally, right? And then what are we doing? Obviously we're aiming for this, but what the bigger factor is I'm aiming for the bottom. You see me circling this here. That's because that's also a minimum area because of the fact that when this pushed down and came up and then it pushed down again, as it was rising, people will use that as an entry method as well, right? So I understand that the algorithm wants to reference that no matter what's going on today. So that's just a side note. But anyways, price pushes down, comes back up, taps that inversion to the tick. See that right there? You can see that, right? All right, and then pushes down, nice inversion. That's the first imbalance of the day. We used that later. And then order flow, boom. And it was playing around a little bit here, but I was confident in getting to this 3 to 4, 3.5 to 4. But what was here? I have these two green lines here. What is the first one? The first one is the previous week's low. And the current month, it's also the current month's low, but more importantly, the last week's low. But then I have this circle. See this right here? See, I have this, that's that week. That's that low of the week of, that I was talking about here on that level right there. So when you're coming down, I mean, obviously, you're not going to just look at the daily here. You're not going to just hit that low. What's underneath that low? You have that low right there, right? So I'm pointing that out just so you could see that I'm circling that that's the second line here. That's that red line. That's that green line here. And, I can't screenshot it any more better than that. So beautiful trade there, right? Now, let's go to the next one here. So while this is happening, so I screenshotted it right there, right? And also I measured, at the time I didn't measure it. So that would be this swing here. I did not measure it, but I should have. I would have had more clarity, but in the sense of holding it to come lower. But I was just so excited about the trade and fucking didn't want it to reverse on me because I knew to the left of the chart what week that was a weekly low that we took out. So it could have been a big reaction. So I ended up trying to be slick and take a sell right here when so this took it out here, popped up, immediately pushed sell right here, and then this little fucking wick knocked me out and then came down to the rest of the. I was only trying to catch this from here to this 3.5 to 4 after I didn't figure that out while this was happening, but as I was, minutes later, I looked at this projection with these candles here and projected it down. The 2 to 2.5 was there, but the 3.5 to 4 was there, and that was beautiful. But so the problem with this is, so when I've caught this big trade, right? It's already a buy and a sell I've already caught. The problem with this is that when the price was here, I didn't feel comfortable buying it because of the fact that, we could have rushed for this area down here. But at the same speaking, this level here, let me go to the chart. This level here, as you can see, if now I projected it from here to here, right? Because that's the most energetic leg, right? I was projecting pretty much the candle. But if you take a look here, the 3.5 to 4, look how we damn near tag the 3.5. And I saw that and I was like, dude, we're in a 3.5 to 4 over here. We're on an oversold. They're going to want to try to wipe out some of these sellers. And then the entry pattern here was pretty, it wasn't that bad, but I was just spooked. But the price, so this candle here, this 10-11, right? So we push up above it with the 10-12. And then this 10-13 digs into this wick. Now at this point, I'm pretty kind of mentally just, excited about the wins and all that, and I didn't buy it, and I should have. But anyways, I had to let it go. So what did it do? It started to creep up slowly with these stupid ass wicks right here, and I was like, oh, you bastards. So at this point, I'm starting to get FOMO, and I'm about to be on tilt because I'm trying to sit here and try to catch this sell. So what did I do? I ended up trying to catch this sell here, just super impatient. It digged into this breakout level, and I was trying to rush it for the rest. That didn't happen, and I recognized myself about to be on tilt and just trying to overtrade. So had to let it go. Then the price came up here. All right, price came up here, got into this imbalance right here, and that was also a breakout level. Look how the price shoots right down. So we push up, we take out this liquidity, and we get into this imbalance. Plus, we get to this breakout level right here. Right, you see how we push right through. So we're right in here. So right when we push up here and we start to come down, I end up taking this sell. All right, and then it comes against me real quick. I know right away I'm wrong, or it's wrong. And then they wanted to come up here to the first imbalance here. And sure enough, if you take a look, I can even copy this here. I'm trying to make this video short, but it's a fire video. And this is me practicing what I preach. It's telling you that I want this to come down. So take a look at that last up candle there. Beautiful. That's a control of price, and 50% of the first imbalance. And then this is my final trade here. So as you see, and not only was it sitting at that candle, but I was using also the 15-minute. Take a look at the 15-minute for a second here. See how we pushed up here like that? And we had an imbalance in the 15-minute, but all the breakout traders, but we had these last two up candles. See that? So boom. So I had that. I was using that originally, but my eyeball saw that it was also hitting this last up candle. But we have the confluence of the first imbalance. You have 50% of it, and sure enough, when I take a loss, trying to tag in originally right here, this is me FOMOing. I'm knowing that I'm fucking on tilt, but I'm confident in what I'm doing and what it's going to do, but I just don't know how they're doing it exactly, right? So they end up getting this one more candle up. Soon as this, now here I'm got this stretched out. So here, this is the trade here. I literally am stretching it out, right? Like, cause I know where I'm trying to snipe, right? So I can get my best entry and stop loss. If it's wrong immediately, I'm fucking out of the trade, and it's literally hundreds of dollars, a couple $100 of a loss. So if it doesn't go where I want it to go, then it's just not working out. But then they had this final rate up here, and then nice little gap. But anyways, and X marks the spot. So while the price is bold face blue buying, I push the sell button. That's the only way I got this fucking entry right here, just so you understand this entry. So the entry is also matching, because when it's bold face, it's literally sitting inside that fucking candle. So I end up getting filled like phenomenally right here, and immediately starts dropping. And then where am I taking this? Well, here I have to remember, just like I made the video, was it Wednesday? You don't want to get caught holding the bag. So I'm confident in coming down to wipe out these buyers right here. But as you can see, we get a push breakthrough. This is technically the entry. This is where you should be entering right here. Or if you enter, an entry model would be right here. Once this candle here closes below this inversion, you can immediately use that as an entry method. Stop losses up here though. And that's why I do what I do with the sniping of trying to catch tops and bottoms, which is not, in a perfect world, not healthy. Again, I know what I'm doing, but we'll take some losses, and that is what it is. But this is really the preferred entry right here. Why? Because we get a displacement, we get a break of structure right there. We push back up right into that inversion, using this imbalance as well. I mean, you got X marks the spot, which is right there, right? Plus these down candles. See these down candles? This is a resistance. So all that coupled, order flow is kicking in. So I'm looking on the left side of the chart, got this inversion right here, and this X marks the spots there with that bearish imbalance. We're digging in it, and then we tag down. Now, so the trade here, I'm already, by the time I take the screenshot, I'm trailing it, but I don't expect it to break this low because of and why is that? I'll give you two reasons. Number one, you don't want to get left holding the bag because of the liquidity. Number two, it's Friday. So because it's Friday and we could have a reversal in London and lunch, that this is a very high possibility that it does reverse. So you don't have to try to be right here. The way it's dangling here, it doesn't look like we're going to reach this level down here. And this is where, let me close the door. And then here you see I end up drawing this kind of incorrect. Now, this is not incorrect or anything, but while that was happening, I realized that I was drawing it wrong. So not wrong, but the better way to draw this was this, which is, you see it now. You see I'm measuring that high and that low of just those three candles only. Not the extreme high and the extreme low swing, but just the candles. And take a look where it is sitting. That's the trade that I got out of. It's sitting in a 2 and a 2.5, and is damn near sitting right 50% of that. So 2.25 is where it's sitting at, right? And that's where I should have. And I understand that I play with it while the price is live, but that was the way to do it. So beautiful, man. So but yeah, I took some losses here, and I went on tilt a little bit with this leg up because I was like, dude, why don't you just buy this? What's your problem? You've already got a nice leg down. You've already swept that low and the low over here. This is generally a trade that I will buy. But because I was like sitting here like, oh, well, what if we rush down here? And that was just kind of my mindset. But anyways, fire day. Also, I wanted to, well, let me go and continue. So here, that's where I get out. But then we push up. We're using this as a resistance, right? We push back down. And look how they don't take out that low. So because they don't take out that low, that is a problem, which they'll use that for liquidity probably next week. But we have a risk of it coming back up. And sure enough, they came back up, dude. But at this point, I was done, had to walk away. And then sure enough, lunchtime, you get the reversal here. See that? Look what time it is. So it reverses, gets right to this bearish imbalance. And then it looks like it's going to be holding. And this, to be honest, this little speaker here, this is suspect as fuck right here. Right? For not taking this low and still doing all this funky ass shit, that's a suspect as fuck. So anyways, look at the so 1228, we come up and it looks like it's respecting 50%, but look at the next one, 1229. You see how it just opens right there on the 50? Pff, gone. So by then it's gone, it's done. It's just hunting liquidity. That's what lunchtime generally does, PM session. And then what did we do? What did they do? They came right up to wipe out those easy sellers there and there. And then guess what it did? It came to squeeze all the way to the top, dude, of the 930 area. Plus, and it didn't take it out. Look at this funky ass shit right here. That's manual intervention. Pushing it up, and then look to the gap. You have that on your chart. To the gap right there. Look at that beautiful sell off. Where do you take this sell? Where would it be nice to take this sell to? Where do you see the breakout levels? In here. Right there. Look at that. Look at to the right. Right there. Look at that. You can't make this shit up. I'll just do this right here. I mean, to the tick. Jesus. Look at that. Right? Attacking breakout traders. Liquidity, breakout traders, and imbalance. This is the only three fucking things you need in this market. 1000%. And you're not going to be using fibs here for any reason, unless it's the bigger range in the higher time frame, only for the reason that if you did it like this, you know, but that wouldn't have been helpful today. You wouldn't have needed it. But as you see, coming to a 50% here, that's just another reason why I took this sell here. So if you measure this, coming right back up to 50%, plus I have here. So took this sell here, and we had a divergence right there. See that? Divergence there, and we had lower highs here. We had lower highs here and lower highs here. And then when the price was there, up there, we had a divergence with Dow. So you have lower highs with Dow. We had higher highs here with S&P and Nas that pushed it down. And then, and this is also the plus reason why I'm getting out of this sell here, is because we had higher lows with Nas. We had lower lows here with S&P and Dow. And again, if I was still trading, that would have been a beautiful buy. But because I caught the 830 to 9 something, that kind of made me lazy, and then kind of go on tilt here with this leg. But it is what it is, and I'm human. But the other purpose of me mentioning this was because of the fact that if you look at this dollar I was mentioning, are we breaking this high? If the strength of dollar was going to be pushing, you'll notice that bonds sinking. So that right there, and yields rising, and that right there was the decision making of us more coming down, right? So, and I've made that clear days ago, right? So this is not hindsight. I'm letting you know. But look at Dow. Told everybody that was suspect. Told everybody about this low right here, as well. And then getting into these gaps. Oh, well, I mentioned that gap first, and then now we have this shit. But yo, that's the top of a mountain. Look at that peak right there, very, very clear. And S&P also came for those lows. I mean, that was pretty clear. And again, they're using it for they're using the news to do that. Now, another thing I want to add here is also using, how can I, here, go to regular trading hours and take a look at the gaps. So another reason why, when we were up here coming down, was you had this gap sitting right there. Don't look at all this. It looks funky, but it's the indicator doing that. So we gap down because there's price action here and here. That's why we gap down, and that shit stayed completely empty. Obviously they're rushing for liquidity. So as you can see that low right there, right? See that? But take a look at the gaps here, and sure enough, now that's empty. So let's see here. Just a couple things I wanted to mention, but again, with when the opening range gap is between 20 and like 75 points, generally speaking, we'll look for it to come up to about 50%, right? From 75 to about 125 is a nice place for it to also retrace back to that range. But once it's past 120 points, you're gonna expect that price to really just keep pushing off. So 75 to about 120 points is generally speaking. You'll see it miss the 50. It'll come to like the top or the bottom 25% of it. But that 20 to 75 range is a sweet spot where it's generally going to always come to that 50%. But anything higher than 120 something points, dude, you know that shit's just going to be gone, especially with a news event. But what's it called? Again, algorithm is hunting. Algorithm is hunting the past 60 days. If you take a look here, you'll see like today. Let's just go back, and you'll see 53 days, 57 days, 58 days, and 60 days would be right here. So what's in the vicinity of the 60 days? In this case, it would be all of this swing low here. But if we can also look back at the past 40 days, let's take a look at the 40 days. And we've already accomplished that. Well, that's in this vicinity here. And then that low right there, it's a weekly low, so you're just combining that as well. Obviously, it's the 44th day, but whatever. The point is that, what the hell? The point is that the algorithm is actually looking for that liquidity. So this area that I mentioned with this gap here, with the missing sell side candle, plus that swing, plus that matching, I believe that's matching this liquidity for S&P. I think this is a good gist here. But do we now next week? Do we after selling with this liquidity here? Do we pop back up? So first, I don't know. I think we're gonna gap down and we're just gonna be rushing, and that would be a break of structure, in my opinion. Well, sort of like a break of structure, and then fan out that way with lower highs and coming down. But so yeah, beautiful. And then as far as the wick of the week goes, yeah. So as Friday goes, you do expect a buy. And when did that happen? And that's when I wasn't sure when that was going to happen, because I thought that might have been the low. But the problem with this idea is that it's 10 o'clock. So it's still early, but it ended up being the low of the day. So, it was a good call. But these were the lows of the day here. But you expect a big buy, and which I already missed that. So I sold here and thought that it might have been it, but I knew that there was maybe an opportunity for another buy because of the wick of the week, and sure enough, they pushed up higher. This was pretty much the one though, right here, and then they came back to settle that. So, anyways, yeah, man, fucking beautiful. And then explain dollar. And this is where we are. I don't think I'm missing something. Am I missing something? Yeah, just to keep it real. I mean, again, this is it's not. It doesn't have to be that alarming, but at the same time, this looks like it's a shift in market structure here, because when we're coming down, we're getting lower lows, lower highs, lower lows, lower highs, and then we made a new low. So that's bearish order flow, right? Just like this, when we push up and we retrace back, it's kind of like straight shot. Right? Straight shot. Right? Straight shot. Now we get this. This is actual structure bearish. So I think we're bearish. I think this is now confirming the bearishness. And I was mentioning, I was like, dude, I feel like this is going to just explode in one direction. As you remember me saying that video, I said that here. And sure enough, they're using non-farm to do that. So, what's it, 428? It looks like we're going to close underneath the lows here. If we do, that's a big signature. They're just trying to keep it up here to see if it, keep it confusing. But whatever, we'll see. But yeah, look at this. Just stopping on the dime for that bearish imbalance right there from the 27th of Friday, pushing up right there, using that inversion, lower highs. Nice little raid right there. Boom, guns it. Why do they gun it? Because they don't want nobody to get out. And then ultimately this guy right here got fucked. So I still think we're coming here. So what I would like to see now, technically, And don't forget this projection here. We do have a nice 3.5 to 4 here that would get us into this vicinity. This makes perfect sense how they deliver it. If you ask me, in a perfect world, I'd like to just see it, I'd like to see it gap down, for next week. Well, this would be interesting. If they use that see this 1 hour candle, do they use that as support to pop back up like this, and then come down, and then, we just fan out, right? Or I'm seeing it like, possibly if this holds as support, then, are we doing this, right? Like just to get up into that, just sweep this liquidity, get into the breakout traders, and then, roll down type of thing. Or I know there's a lot of ors, but, are we just going to gap down from here and then kind of, take out this liquidity, hit these gaps, and then kind of mosey on our way back up, right? At this point, again, it's January, so it's, we're taking it lightly at the same time, and then the market should get better in February, but we could head for a rough time because this has been some pretty beautiful movement. And to be honest, in the recent years, I've noticed that the first month of January, like the beginning of it, is just really awesome because of the big candles. It's creating sentiment, it's moving it all around, getting you excited, and then they go right into a consolidation mode where they fuck you in like February or March or something, and you just get chopped up, here and there. But we'll see, man. But at this point, it's like so much has been done, and it's been beautiful. But let's see here. Oh, and I never measured this. I did, but not on the video. So let's take a look here with this down candle. You can see we were sitting at 2 to 2.5 right there. If I take this bottom candle too, all right, now we're sitting at 2 to 2.5. That makes sense. So does it reverse from here, or are we gonna really push down for, well, we did talk about that liquidity. That was more for what's it called? Fucking S&P. But this is extreme. But hey, you never know. You never know. You never know. So it looks like we're headed in a different world here. So you guys take care and God bless.